Okay, I want to talk about the add-ons. I sent everybody that email, and you could download those add-ons directly from the email. And the process, as I pointed out in the video, is you just go into your preferences menu and you install them one at a time. That's all there is to it. Everything else is taken care of, and it's really a pretty amazing process. The only thing you have to do is go in there and get rid of the old files if you want to, and I suggest that you do. Now, in addition to those links I sent you, if you go to the add-ons, and I need to log into this just a second, and I'll log in. All of these are available under the support menu under add-ons. And you can see that George puts them up here. He does a good job of dating them so we know when they were last updated. I'm the only one that's really updating anything. There's nothing new. So you can see some of these dates, or most of the dates are back in 2015 when they were originally put up. But to get to any of these, you just click on this and there's the drop down menu, and then you can download them. Now, when you do an add-on from my direct link, especially the Woodward and Brown files, what it does is it updates the user groups, it updates the slices, it updates the group inclusion reports, and it updates all the views, filters, and combos. So it's updating about everything. They set it up for me. George and Matt did, so it is one simple process. And when you install these groups along with the Woodward and Brown, forget about this stuff down here. These are old files that you don't have. But what you're going to get, and you'll see this in the video, is you're going to get W&B user groups full, and the prior W&B user group had a date on it. I'm not going to date them in the future from this point going forward, because there is that new feature in HGSI which allows us to prospect using groups also. And it's not only smart groups, it's also user groups. And if I want some user groups in here, or I want to work from some of these user groups, for example, if I want to work from 50% all stocks institutional, that can be one of my primary groups. No, Sally, I cannot increase the audio. I have no control over that, and everybody else says it's fine. It must be on your end. Does everybody else have audio? James says it's good. I'm talking directly. John Goebel says it's good. So, Sally, I think it's something on your end. Okay. Anyway, getting back to this, what I do when I send these groups out, and I can update these any time, I will update these 50% groups because, for example, this folder right here contains all of the stocks that have at least 50% institutional sponsorship, and we all like to know which stocks have good institutional sponsorship, and I arbitrarily just chose 50% when I started doing this years ago. And these are some of the groups that I update all the time. The other ones I do not do so much. These down here I do update also. These are the top 100 stock holdings in the ETF components. And then these are the top 100 stock holdings in all of the indexes, such as the S&P, the 500, 400, and 600, and the NASDAQ and everything. These are the widely held stocks. And this is where there's there's also very heavy institutional activity and sponsorship. So I just want you to be aware of what those are. The other groups I don't update that much, but occasionally I will. Okay, so this is going to be one of the things in the add-on, the W&B user groups full. The other one I show you in the video, just highlight it and click on the X to delete it. Now when you're deleting groups, I always suggest that you have the designer only open. Don't have the warehouse open too, because it takes longer to delete these groups. If only the designer is open, they disappear immediately. If the warehouse is open or the ranking module, it has to interact with those modules, and it just takes longer to clean up your database. Okay, so that's one of the things I wanted to talk about, let's really get into some of the major changes I made. Most, as I said in the email I sent out, the Morales and Casher and the intraday, there were some cosmetic changes. I just fixed some charts, things like that. Nothing real notable, to tell you the truth, but things that were bothering me, so that's why I fixed them. Most of my emphasis went into the VPA, because that is where I am doing most of my work now. So I'm going to go into the warehouse. I just happen to be looking at this. There's nothing new in here. These are the stock wolf packs, groups that are up today. You can see 1,838 stocks were up and 1,073 were down, and these are the groups that they belong to. I was just looking at this before I came online. I generally look at this information every day because it gives me a good feel for where the strength and the weakness is in the market. Now I want to take a look here on my other computer and see what's going on. It looks like the E-minis are still up, so it's a strong day. One of the reasons the E-minis and the market's going up and the explosiveness yesterday is because there are so many people short that are praying this market goes down. I don't see it. I don't see it yet. That can change at any time. Okay, John. John had to leave. That can change at any time, but what I'm interested in primarily is not so much a short-term trading, and I don't think most of you are either, but finding good candidates for the longer term. Now, the longer term can be, a week to 2 weeks to months, but I think that's probably where the focus for most people that use HGSI is. Now, some of the things, a couple of things that I put in here, there's something in here called the Perfect Speculator Screen. I don't know how many of you have heard of this book. It was published in 2005. I read the book several years ago, and you can buy it on Amazon for about $3. The version that works on the Kindle, and I assume Barnes and Noble has it also. But really, what it is, it's a momentum approach to the market, essentially buying new highs. And there's been a discussion on one of the growth stock groups. Most of those people are IBD users, and I just put this in here because I think, after rereading the book over the weekend, I think it has a lot of value, and I'm going to show you some of that. I won't go into it in great depth because that is a subject for another time. But what it does, and let me just click to this one right now, number 2. I put number 1 and number 2 in here, and if you happen to buy the book or read it, you will see that this is a kind of classic O'Neill type momentum investing, but it's not as stringent on the fundamentals. In fact, he rarely this guy that wrote the book, which was actually an interview with a old trader who was dying, and he wanted to pass on his knowledge. So this guy compiled the information and wrote the book, and all of his trading rules are in there. And he was essentially looking for stocks, relatively new stocks. By new, I mean 10 to 15, no more than 10 to 15 years old, that are breaking out into new high territory. And let's just take a look at this, and I'll show you what I've got here. Notice this column right here, days closes high. Now HGSI has the ability to look back 798 days. That's the maximum right now. I may talk to Matthew about extending that, but that's about 3.2 years in trading days, and this is going to encompass most of the stocks in the database. You can always look at the chart to see if there is a prior resistance, but the theory behind this book, and by the way, this guy made I think he started with 100,000 and made 1.8 million on Taser when it was going up. You know, that takes a lot of nerve to put that much money in a single stock. But the point is, he would look for these great opportunities and just kind of go all in. And most of us don't trade that way, but there are still a lot of opportunities for stocks that are showing this. Now let's just take a look at some of these. I just happen to have this sorted on the combo, which I called longer term demand. That's a combo I've had in here. And this column here shows the percentage price change the last 21 days. These are the industry groups and so on. And notice that there are a lot of REITs. REITs have been extremely strong this year, and these stocks are out to new highs. And also utility networks have been extremely strong. We've been seeing these come up in the top 50 group inclusion report multiple times over the last several months. And you know, they're dividend yielding stocks, and also that's where the money's flowing. So let's just take a look at I'm going to go back and sort on the raw combo. I'll just look at the top stock, Public Storage. Now this is a chart, and you're going to find these charts in the high HGSI volume point of control folder. Now starting right here at number 7, this is all new. This is something I came up with before the latest Tech Talk. And I think this is going to be an extremely powerful addition to HGSI. Matthew hadn't thought of it in these terms, but what we can do now, and these charts are all made for you. I spent a lot of time on these charts, but you can change them any way you want to. Each one of these lines represents a different volume point of control. Now, if you look over here, you'll see the VPOC. The 250 is yellow, and you can't see the 250 very well on here because it's right behind the red, which is the 90, and then the 30 is green, and the blue is the 10 period volume point of control. What this means is that you can see this is a good example on this chart, the volume point of control as of now for these charts. The 30, the 90, and the 250 was all right down here in this congestion area. And look what happened when this stock broke above the 10 period, past the 30 and above the 10 period, and the 10 period is the blue line right here. Now the 10 period today exists up here, but this is where it broke past that 10 period volume point of control. Now if I scroll back here, I'm going to go back in time, and when you do this, you can see where the volume points of control were on this particular date. And this was back on 4/7. You can see the huge amount of resistance here, support and resistance both. And it took a long time to get past here. In fact, it fell off sharply here. You can see it broke below the 10-period volume point of control, and then turned right around and went back up again above it. But then when it got back into this congestion area, and this congestion is based upon price and volume. So this is showing really good resistance. And then when it cleared this on this day right here, it's hard to see kind of on this black chart, but notice the group was going up, there was a candle, and then there was an effort to rise signal the next day, another confirming signal here, then a hesitation signal, and it broke back down below this 10-period volume point of control, and then it went above it again over here. But it stayed well above the 30-period volume point of control. So the potential for this to keep trades on the correct side of the market, just using the 10-period volume point of control line, which is the blue line, and in conjunction with the group line and the force indexes and the pocket pivot, I believe is a really a tremendous tool available to us in HGSI. Now I believe Matthew is going to be able to give us a warehouse and filter field when a price closes above the 10-period volume point of control. It's not going to be perfect. You're going to have choppy areas like this, but it will be an alert. And also when used in conjunction with the force indexes, like up here, notice that there are no pocket pivots here though until this point right here. So I am leaning towards using it on right now with the force indexes because they're based upon price and volume. Pretty much everything I do anymore is based upon price and volume and support and resistance. Yes, Pete, thanks for putting that up. It's Perfect Speculator. It's a $3 book, I think, and you know, I'm just really getting into this, but I think there's tremendous potential. Now let's look at a few more charts here. That's this one. This is the same chart, but I put a bucket in here which represents the 10 days, this gray area. I don't know if you'll find this useful or not, but you can see how this traded over that 10-day period for the volume point of control. It broke above it again here, and it was moving up. I mean, it looks like it stalled a little bit today. Let me zoom in on this just a little bit. We can see this better. Okay, let's go through the rest of these. Here is a white version of this. And I went with bar charts this time. I gave you all kinds of choices. Here is the white version with candles. I know a lot of you like to use candles, but the blue line represents the volume point of control. All of these lines are consistent over here. This one is a line chart, and the reason I am using line charts here is when you read the Perfect Speculator, and this is something that we should do anytime, all the time anyway, is a line chart. The black line represents price. A line chart is the best way to see trends and support and resistance. That's why I put a daily line chart in here, and I also put a weekly line chart in here. And if you get the book and read it, you'll see that he paid a tremendous amount of attention to staying in a trade based upon the trends. He looked for higher highs and higher lows, and that is what keeps speculators that do this properly in these trends for the longest time. Now here, this is a weekly chart. It broke down here, and it retraced, and then it really didn't get past resistance again until it broke through this 10-period volume point of control. And one more chart I put in here. I like this accumulation chart from the newsletter a couple of months ago, so I thought, why not just put it in and put a volume point of control on here also. And you can see in this instance that the accumulation pretty much coincides with the move above the volume point of control. Here was a pullback both in the stock and the group. Group's very important. So those are the charts that I have associated with volume point of control. Now let me show you something else here. Let's just go back to public storage. I'll stick on this. This is a REIT, and I'm going to zoom out. I'll look at a couple other charts too. Now, one of the or a couple of the other charts that I put in here are called VPA VFB charts. This is something that we really haven't used a lot lately. It's a tool that's been in HGSI for a long time, but there is something called the charting VPF. And if I'm going to click on this right here, can you see this brownish background? I can go to a white chart if you can't see it. I made it dark because I wanted to, I didn't want it to overpower the candles. But first of all, let me explain as I go in here. Let's go look at this filter. Very basic filter for this. These are stocks trading above $5, 250,000 shares per day based upon the 90-day moving average. Why 90 days? Because that's what the VPA signals, or flags I should say, are based upon. And then this right here, the days closes higher is greater than or equal to 798. That will find these stocks that are breaking out to 3.2-year highs, or in most cases breaking out to all-time highs. And I thought I would just put this chart in here because every time that you go from a warehouse view, this filter is transferred into the chart. And every time these conditions are met, in other words, when this stock, any stock here, is trading out to a 3.2-year high or higher, and let's just look at this chart. I'm going to do a weekly on this. You can see that it's actually trading at an all-time high when I do the quarterly chart. Let me put that phone on the ground. So, you know, some people say buy and hold doesn't work. Well, in this instance, it certainly worked, didn't it? If you could go through the up and down periods. But let's go back to the daily chart here. Each time on the daily chart that these dark lines appear behind the candles, that means that those conditions were being met. In other words, it was breaking out to an all-time new high. This is what generally happens. And look at this. It's above the 10-period volume point of control all the way up to here. Then it falls back. The group fell. It chopped around here around this 10-period volume point of control, and it broke back above it here as the group was going up, and it hit another all-time high. Once stocks get extended, you all know this, there's generally some backing and filling. I've yet to see a stock that goes straight up. But it's promising that this stock is out to a new high. When it pulls back, it doesn't pull back that much. And if people like to look for cup and handles, here's a cup, here's a handle, and it broke out again, hit an all-time high, and then it just kept going. Here's a little pullback. And it really, other than this big sell-off in February of this year, it really has held up quite well. And notice that it broke down through the 10-period volume point of control, and it also broke through these other points of control right here at the same time. Didn't stay down long. You can see that it's changing. Let me zoom in on this. You can see right here that there are buyers coming in. It's changing hands, and then a few days later it broke above the point of control, the 10-period, and then it bounced around here. There's resistance in this area, and then it took off again. So I'm pretty excited about this volume point of control and being able to see multiple periods of resistance, price and resistance based upon these different time frames just by putting the vertical lines in. You can see where the congestion is, and then as we move forward you can see where it starts breaking away. Let's look at another chart here. Now this is a semiconductor chart, and you can see that it was breaking out, meeting those conditions several times back here, and then look what happened. The group rolled over. Group rallied. This stock didn't rally so much, kept going down. It chopped around here, a lot of false signals here, and then the big sell-off before the break above. First, the 10-period volume point of control got through the resistance on the 250, got up to the, let's go back here and see what it looked like at the time. Okay, I'm going to just walk this forward. Okay, got up to the 90 volume point of control, and it broke through the 30, but it didn't last. There was a shakeout. Still actually remained above the 10 period even during this shakeout day, and it's pretty much stayed above it all the way through. So it's just it's a powerful method to see the points of resistance based upon both price and volume, and also I believe that 10 period moving average is going to be a very good way to help keep traders on the correct side of the market. Anybody have any questions about this? Well, I guess I must have explained it pretty well then, huh? Anyway, I didn't mean that. I'm just getting started on this. This is all new stuff. This chart is week and a half old maybe. I spent a good part of the Easter weekend putting these together, and we'll be building upon this going forward. Now I have one more view associated with this. It's he is looking for all-time highs, but I thought, that's great. But what about stocks making 52-week highs? Especially when you have a big sell-off like we had. Why do you necessarily want to wait for stocks that are making all-time highs? So that's what this view does, and it also has the column in here with the days close as high, and remember 798 means they're out to an all-time high, but you can see that there are several stocks in here that this would be a 5-day high right here, but it's also within 10% of its 52-week high, down 9.1%. Let's just look at it out of curiosity. Too loose for me, but it does meet all of the requirements. Now look how it's kind of trapped in this area right here with the volume points of control. But when you see a sloppy chart like this, it's really tough to take a position. So this view will concentrate or be limited, not be limited. It will include the other stocks, but it's also primarily to find stocks that are within 10% of their 52-week highs. Let me see what the combo is here. It's the industry percentage price change 5 days. So this, I just chose that because my thinking was at the time, let's find the stocks in groups that are moving over the past 5 days. And that's the current sort here. But you can certainly sort on anything. And if you want to find the stocks that have moved the most over the past 21 days, you can sort on this column right here. This is probably a buyout. I'm not sure. Oh, maybe not. No, doesn't look like it. It was a gap up, and it's continuing to move higher. So you can see that this dark brown area in this chart is indicating that this stock is out to an all-time new high at those, or no, it isn't in this case. See, this is where you have to go back in time. I don't think this is right. I mean, I'll tell George about this one. I doubt if this stock traded for $1,500. While I'm doing this, I hope you don't mind. I'm going to just grab this and put it in Snagit, and then I'll send that to him. But that's why you need to look at the charts too. This is probably one of those stocks where it used to be maybe the symbol was associated with a different stock, and that's why it looks like it does. Okay, let's talk about a few other things that I put in this add-on. I didn't change much else in these warehouse views. I'm pretty happy with them, but the thing is, there is a tremendous amount of information and things that you can do with these views, and that's all stuff that's going to get worked out over time. But I wanted to leave them in here, and ultimately, as I go through these processes, they're going to be dragged up into the favorites folder. And to drag them up, you can't do it from the warehouse views. Some people are trying to do it from here. You have to click through to the Choose Create Warehouse view, and then you can drag them up. Just left mouse click and drag it up. Don't hold your shift key at the same time because it'll move everything up. You want them to remain down here in the original folders, so they're always there. And then this way you can select certain views, play with them. If you decide you don't want them, you just delete them. But I decided to leave everything in here, and I went through and checked them. Everything serves a solid purpose, or I wouldn't leave them in here. Okay, let's go over to Woodward and Brown. I didn't change a bunch in Woodward and Brown either, but I think there's one in here that you will like under rising earnings estimates. I had this in the past, and I added one more to it. Somebody wanted a screen, one of our customers, that uses or screens for stocks that had consistent earnings growth and revenue growth in the past, and the current projected earnings are also going to be positive. So what I did is I just took everything down to 0%. Revenue change greater than 0%, revenue previous greater than 0. Same thing for the earnings change and previous. Now if you want to bump these numbers up or duplicate this and like put 10 or 20% in there, that's fine. I just made it pretty lax. Just a second here. I've got to find something here. Okay, can you hear me now? Okay, well now that I have you back, thanks for letting me. I glanced over at my other computer and I saw that you were raising your hand. So can you hear me and can you see my screen or no? Do I have to share my screen? Okay, let me look. Let me get this figured out. Okay, good. Sorry about that. It must have been that Snagit that messed it up. Anyway, I'm just the video will be posted, and anything I said that you missed is going to be on the video, so I'm not going to go back. Except let me go back here. I am in Woodward and Brown now, and I am under rising earnings estimates, and it's number 4. And what I put this together, a customer request. He wanted growth stocks, and I just took out any required growth and revenue growth, EPS and revenue growth, other than anything above 0, and then I put this field in right here, percent EPS projected growth for the current quarter. And you could do it next quarter too, but I just left it at this. The reason I did that is he wanted the ability to find stocks that have shown consistent earnings growth and also are projecting positive earnings for the current quarter. Now here's a stock that I'm on my weekly chart here. Let me go to my daily version of this. Actually, I'm going to go back to volume point of control here. And this is a stock, when I first started playing with this Perfect Speculator, I put it together 2 days ago, I think. I saw this VPA signal right here, and it hesitated. I was going to buy it right here on this day, but I didn't. And it was up over 7% yesterday, and you can see that there are all kinds of pocket pivots with it. Now notice how it kind of hung around here at these volume points of control, dipped down below the 10, went back above the 10 on this effort to rise. Same day there was a pocket pivot, and then it started moving up. And I didn't notice it until it was right here, because that's when I had put the Perfect Speculator screen together. But my point is that in conjunction with using these charts, we can do fundamental screens too. Now, like I said, the man who was interviewed for the Perfect Speculator, he paid very little attention to fundamentals. He was looking for momentum stocks and stocks that have tremendous growth potential. They're looking at future earnings. So right here we're looking at future earnings on this stock. And this quarter could also be included too with the screen. But Fabrinet, I wasn't aware of this stock until the other day, but you can see that it's a turnaround stock. It turned around from having some bad quarters and started growing. These percentages started increasing in both the revenue and the earnings for the prior 2 quarters compared to a year ago. That's why this passes the screen, and then the earnings estimates are supposed to be up 80% compared to the same quarter 1 year ago. So this is combining fundamentals and momentum, primarily fundamentals on this, and then I'm letting the combo rank, which is percent volume to the 20-day moving average volume, find stocks that had a big burst of energy yesterday. Now you look at this stock, this is yesterday. I mean, there's no way I'm interested in that stock. Fundamentally, it passes all the criteria. The earnings and revenue growth were increasing. This is negative earnings, but it's better than what it was 1 year ago, which was -6%. But obviously, this is not a very good stock. And that's really one of the fallacies about earnings growth. Earnings growth really, earnings momentum really guarantees nothing. And that's why it pays to see what the demand and the supply on a stock is. That's really what is critical. The market tells you what this stock wants to do, and once again, I base all this on price and volume. Let's just look at another stock here and see what. I want to look at my group chat window over here. What we have here, negative earnings. See these negative earnings? But that doesn't matter. The earnings growth is what really matters on a stock like this and the projected earnings. But the technicals are agreeing with this, and the group is agreeing with this. You can see it pretty much tracks the group. Here was the breakout above the 10-period volume point of control on this stock, and it was around $12, and it's worked its way up to 14.8. Here it came down, it tested it here. It's chopping around a little bit, having a little bit of trouble getting through the 90 period, but it had a pocket pivot yesterday, and it's kind of stalled out a little bit now. But this is a view that was put in to screen for fundamentally strong stocks, and then we can use the technical indicators, the VPA, and so on to look for potential candidates. Now, I'm not really going into a lot of depth here on how I'm going to use this stuff, because to tell you the truth, I'm still working on all that, and it will be refined as time goes along. I'm just showing you some of the things that I put in. The main thing really is the volume point of control. Now let's do one more thing here. I'm going to make a group out of this. Growth stocks with rising earnings estimates for the current quarter. Okay. I'm going to make a group from the list. 380 stocks in here. I don't need to generate anything, but you can see that the group was made. Now, like I said before, I'm really leaning more and more towards using the force indexes and also the VPA on these groups right now with this volume point of control. So let's just go to these force index scans under Woodward and Brown and the force 2-day up to day. Now, yesterday was a massive up day in the market. in breadth and everything else. And all of these stocks yesterday, if you look down this column right here, this zero column, they had a positive force index. Now Broadcom had a pullback, and it had a 2-day signal yesterday. The 13-day force index was still in effect, but there was a pullback, and it fired again yesterday. You can see that this meets the criteria up here for the growth, and the next quarter estimate is going to be positive, only up 2.55%. But look at this stock, what has happened with it with this volume point of control. It was finding support down here at these levels, the 250 and the 90, and then it got above the 10, went through the 30, and remained above the 10 throughout all this move. From here was a test for supply right here. It actually broke up through here, but on this test for supply, it was around $120, and it's now trading today at 157, somewhere in there. Let me click on this. 156.88. And also the group is very strong. Let me look. I need to see if I can. Well, I don't know anything about the cloud, Pete, and I don't want to know anything about it. But maybe it is. I mean, somebody else made that comment too. I've got enough tools in HGSI to work with here, and as you'll see going forward, it's all going to be based upon price and volume and support and resistance, VPA signals, VPA flags. You know, we're bringing earnings into play now. We've got plenty of tools.